All right, there we go. There we go. There we go. Can you guys hear me now? Can you guys hear me now? All right, let me know if you guys can hear me now, family. Now you guys should be good to go. Now you guys should be able to hear your boy. And like I was saying, I want to just say thank you for every single one of y'all that's rocking with me this morning. Shout out to all y'all that's plugging in, right? Because we are here. We are live, guys. Going to be taking a look at the CPI report that's getting ready to release in about 7 minutes. This is going to be a very, very important release, guys. Almost every professional trader, investor, institution, corporation, right? Every single big entity that's trading professionally, including retail traders that are trading professionally, are all paying attention, guys, to this data, right? Because depending on how this actually comes out, it's going to tell us pretty much the stance or the potential stance that the Federal Reserve can have on this. And it's also going to be able to give us a an outlook on how we should interpret the market from a sentiment perspective as well. Okay? So we got to really be aware of these things, guys. It does go live in about 6 minutes. 6 minutes it is going live. And we're going to see how the markets react and respond to it. Okay? As of right now, core CPI is expected to increase. Okay? So the change in price of goods has increased from this time last year. Okay? Regular CPI is actually expected to decrease. And this is probably going to be a very interesting one, right? Because core CPI, that includes everything except food and energy. Regular CPI includes everything, including food and energy. Okay? So they're expecting the actual CPI report that measures with everything, including food and energy, which are usually our most expensive costs. They're expecting that one to actually decrease, but everything else, excluding food and energy, they're expecting that to actually increase. Right? So CPI, they're expecting a decrease. Core CPI, they're expecting an increase. And it's going to be a very hectic morning, in my opinion, family. All right, in my opinion, it's going to be absolutely crazy, absolutely hectic. But one thing that I do know is I am extremely excited to be here live with y'all as we go ahead and watch this happen in real time, and then pretty much come up with a bias overall after that. Okay. So from a technical perspective, guys, let's go ahead and take a quick look at the markets really quickly. Right, from a technical perspective, where is my toolbar? Oh, there it is. There we go. Yeah, from a technical perspective, guys, like we are still very much bullish, right? Like there's really no signs of the market being bearish, right? We had short-term pullbacks, but that's expected, right? Not every market is just going to continue to shoot up. That's just not how it works. You know, after every impulsive move, we should experience or expect a pullback or a correction or a retracement, whatever terminology you want to use. But overall, guys, that does not change the fact that we are still overall bullish. Now, if you guys were on last night's stream, last night's session that I hosted with you guys during Asian session right here on YouTube, you know, I did mention to you guys here for the dollar itself, guys, that we had two potential areas that we could play off of. The first area and this is all just from technicals, right? Anything that comes out literally in 5 minutes can absolutely change my bias from a technical perspective, right? So just put that out there. This is literally simply technical analysis real quick. But yeah, overall, guys, I wanted to see the market absolutely go ahead and fly, you know, potentially from this level right here, the dollar itself, right? You know, go ahead and catch this support and go ahead and see a nice move higher. But again, we are going to be on the sidelines. We are going to play cautious because there is a chance for price to go off from there, but there's also a chance for price to go down to this demand zone. And then off of this demand zone, guys, we actually end up finding, you know, those buyers that are possibly waiting for price to get down there. So that's me from a technical perspective. Now, again, please understand, guys, sentiment of the markets is absolutely how I play. All right, I really figure out a bias from a sentimental perspective. And when you look at the market, guys, from a sentimental perspective, more times than not, you're actually trading with, especially if you understand sentiment, you're going to be trading with the smart money, right? You're going to be trading with the big banks, institutions, the largest traders, largest investors in the world. So it's important. It's important that once we do get this release, this data that gets out, that we try to figure out what the sentiment is going to be. Why? Because if we have risk on sentiment, guys, that's pretty much based on the release, right? We're hypothetically speaking, okay? Inflation right now is at 9.1%, right? So hypothetically, if we come out far lower than 9.1%, maybe something lower than 8.7%, 8.8%, anything lower than 8.8%, guys, that is going to potentially send the markets flying, right? And the markets I'm talking about is stock market, the crypto market, the commodity market, right? A lot of these riskier markets that could yield us much larger returns than, say, the dollar and the U.S. bonds aspect. Yeah, if we come out, 8.8 and lower, 8.8 CPI and lower, those are absolutely going to fly. The dollar is going to absolutely tank. Now, if we come out high, around, say, 9% again, then that's pretty much not going to change anything in terms of sentiment perspective. Okay, sentiment is still going to be risk on, or excuse me, risk off. So anything near where we're currently at right now, anything near this 9.1%, we should still expect continuations to the long side. All right, so that's pretty much just my approach from a technical perspective, from a sentimental perspective, and from a fundamental perspective, guys. So overall, I'm still very much bullish. We just got to see how the data comes out, and then we'll be able to react off of the actual data itself. But if for whatever reason the market decides to tank on the data, I'm still, depending on the data, I'm going to be looking to buy it down here for sure, right? Go ahead and fill, this imbalance, fair value gap, whatever you want to call it. But this is also where we ended up finding, a lot of demand for the dollar pretty much picking up, right? So overall, that's pretty much what we're looking at. Let's take a look at the indices, really see where they're at. So a lot of these indices, guys, again, we spoke about this last night on the Asian session stream, but yeah, every single indice right now is pretty much at these levels of supply. Levels of structure, support, and resistance, or not just support, but levels of supply and demand right here. And they're at very interesting levels, right? And again, depending on how the data comes out, it's going to tell us exactly what the heck is going to happen next, guys. So we are literally less than 1 minute away from the actual release. If you guys are excited, if you guys like the background music, the cinematic music, just to make it a little bit more of an exciting moment, go ahead and smash the like button for your boy. Right, go ahead and smash that like button for your boy, family, if you guys are appreciative of this. If you guys want me to do more live streams trading live news releases like this, then definitely go ahead and smash the like button and let me know in the chat, in the comments down below, because this is definitely something, guys, that I want to actually do consistently, right, with you guys. Just strictly provide you guys with as much value in real time as possible, right? So definitely go ahead and smash the like button. And like I said, we'll see ultimately how these markets end up reacting and end up responding. All right, so let's see where we're at now, guys. We're literally, again, right now, the release just came out. Let's see what it came out as. Okay, CPI actually had a pretty decent miss, guys, right? CPI actually came out at 8.5%. Core CPI came out at 5.9%. So overall, CPI has dropped, guys, across the board for both of these news releases. That in itself is going to bring strength. Look at this. Look at this. What did I say? Look at this strength to the stock market. Look at the dollar. Look at this type of release. 8.5, guys, was the actual big beat on projections. This right here, this type of release is going to bring optimism in the markets. Right? It's going to bring a lot of optimism in the markets. Okay? Look at this. Massive move higher, guys, right? So again, just a quick look. CPI, guys, came out at 8.5%. They were predicting 8.7. It actually came out lower. Remember what I just told y'all. Anything lower than the 8.7 that they're expecting is going to cause a lot of optimism in the markets. Right? Look at how the markets reacted. US 30 flew. NAS 100 flew. The dollar is tanking because of this release. Now, guys, just keep in mind, right? Remember what I said. I was bullish the dollar as whole. And I'm still long-term going to be bullish. But with this type of miss or this type of data getting released, this can really change sentiment for right now. Okay, this can really change sentiment, guys. Right? And this can cause a lot of people to want to go ahead and start positioning themselves in the markets and take off of risk on sentiment. Right now, that type of release, family, is definitely going to lead to more risk on assets benefiting from it. Okay? Risk on. Now again, I have to keep on just talking about it because this is important. But why would we actually be looking at this family as risk on release, as like a risk, as a release that's favoring risk on assets? All right, let's see. Who knows? Who knows, guys? Right? Let's see who's in the chat with me. Right? Who's in the chat with me, family? Who knows? Right? Why would we consider this type of a release or this type of data release as something that is going to favor the riskier plays? Okay, who knows? Right, the euro's flying, the Aussie's rebounding, New Zealand's flying, pound dollar's rebounding. Right, dollar yen is dropping, USD CAD is dropping, USD Swiss is dropping, pound yen really didn't move too much. Look at this. Risk on. Right, we are risk on. Right, we are risk on. Look at these markets. Right, when the dollar is weak, we are risk on. Based off of this release, is going to lead towards risk on environment. Right, let's break this down, guys. Again, previously 9.1%, they were expecting 8.7. We came out at 8.5. That means inflation is lower now. Right, or inflation is finally starting to turn around and plateau. Whenever we have signs that inflation could be under quote unquote control because we now see a downtick in CPI, traders and investors across the world, guys, are going to eat up this data. They're going to eat up this information. Okay, so yeah, for right now, we could experience dollar weakness. We can continue to experience indices strength, euro strength, Aussie strength, New Zealand strength. We should continue to experience, guys, a lot of these riskier plays 100%. So how we can take advantage of this now, because you guys know we don't actually trade like the actual release. We wait for the release and then we make a decision after the release based off the sentiment. You guys see how I did that, family? I am risk on sentiment for right now. So if I'm looking for an opportunity to get involved, right? If I want to look for an entry here for, let's say, trading dollar correlated pairs, I don't want to enter up here, right? It was a big move. But if for whatever reason, guys, because during news releases, we see big whiplashes, right? Where we see a massive candle like this, we see another very strong candle as well going in the opposite direction, only to retest back to low and then go ahead and continue in the overall trend. So if we do see something like that, guys, for a lot of these assets, now that we have, again, the sentiment overall, now it's just all about finding our entries. So any little pullback here for euro can trigger a continuation, right? Same thing for the Aussie. Any short-term pullback for the Aussie can trigger a continuation now of this newfound momentum. Same thing for the pound. All right, big move. We could experience a very, very quick reaction, retracement for this thing to continue higher. Okay, for the indices, same concept. If for whatever reason, again, because this could happen, guys, and it could happen very quickly, though, we get another retracement back down just to go ahead and start filling a lot of this imbalances, that could trigger, more upside here, for the indices as a whole, guys, right? So just be aware of that. That's how I'm going to be positioning myself. Again, I don't trade the actual release, but we do want to trade after the release once we figure out sentiment. So overall, any little minor pullback on these big moves, in my opinion, are great opportunities to go ahead and look for some continuations in the market now, right? Ride out, stick with this current momentum that we're experiencing, because again, there was a major beat in projections, right? A major beat in numbers, which is going to bring hope to the markets, hope to the economy, right? So we should experience dollar weakness. Okay? So overall, guys, that's what I'm going to be looking for. Any pullback on any of these assets I like trading, I'm in there all day long. Okay? Even gold, right? Gold see an increase off the release. Any little pullback back down could trigger a continuation in the upside. All right, so overall, guys, I'm just sticking now with what the data is telling me. Based off sentiment, I believe we are bearish. I believe we are not bearish, but I believe we are risk on sentiment now. Definitely based off the release. So now it's just about of positioning ourselves to finish out the week overall. Right now it's about positioning ourselves. Let's see, bias change. Yeah, for right now, we definitely have to adjust our bias, right? Let's see, I just got effed up. Even my stop loss didn't say me. Yeah, LT, you know, when we have news releases as something like this, as important right now as CPI, you know, there are times where you are going to get slipped, right? That's called slippage, you know, when the actual entry pretty much jumps over any orders that you might have had. Okay, so overall, that slippage was crazy. I'm pretty sure it was crazy. But yeah, that it happens. You know, that's why I normally don't even like trading before the release, but I do like looking for positions after release. All right, so now let's see what else we can do, guys. What can we look for now, right? Well, now that we do have this release that came out, and now that I am expecting dollar weakness to continue, from a technical perspective, where can we realistically expect price to go to? Right, well, we do have this area of structure right here, area of supply. This could maybe be an area where we start to see some type of weakness come back in for the euro. But overall, again, we have to keep in mind, guys, that type of data, that release, is data that could really shake the markets. So I realistically would not be surprised, right, if we even came and smashed above this area of structure right here, this supply zone that we have right here, and continue higher, right? Again, that type of release, guys, is definitely impactful, right? And that's the type of release that the Federal Reserve wanted it to see, right? That's the type of release, guys, that the Fed wants to see. So you best believe now, all you're gonna see, guys, from the Fed is them pretty much talking about this release and how good it is and how inflation is under control. So that means we're not in a recession. Oh, we try to tell you guys we're not in a recession. Da, 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 da. That's all you're going to start to see, guys, on social media, mainstream media, the big stations. They're now going to use this report as a way to pretty much just confirm that everything that they've been doing with raising interest rates, tightening up monetary supply, things like that, that everything that they have been doing has actually been working, right? So this is signs that them doing that is working. Now, because of this, what we have to be aware of now, right? And one thing we have to pay attention for moving forward, guys, is now seeing if this type of data is going to be enough for the Fed to get some balls and actually start to do the Fed U-turn, right? Because now with this type of data, it's a matter of now seeing if they're actually going to continue raising rates. Again, the Fed already is pretty much in their mind all set that there's no recession, right? And that the data is not qualified for a recession. So you pretty much lining that up with low CPI, low unemployment, which just came out last week, low unemployment, low CPI. That can potentially start to make the Fed do a U-turn on them trying to, again, quote, raise rates to fight inflation. And they might actually start changing course. Guys, I'm going to tell you this right now, right? Write this down somewhere. This is important. The moment that we see the Federal Reserve start to talk about doing a U-turn, start to talk about lowering interest rates, or at least lowering how much they're going to be raising interest rates. Like on the next interest rate decision, guys, if we actually raise rates by only 0.5% or 50 basis points, which is lower than what we have been currently doing, which has been 75 basis points, investors and traders are going to eat that up. Investors and traders are going to position themselves in a more risk-on asset or risk-on sentiment, and they're going to be selling the dollar. They're going to be buying all these indices because now we have signs of the economy finally to come back around. Guys, keep in mind, right? There's major things that we pretty much deal with from the company or from an economy standpoint, right? We have CPI, measures change of price and goods, right? CPI is one of the major releases, right? Then we have NFP, right? Non-farm payroll, right? Which measures the change of employed people, right? And then the other one, the other major one, guys, is GDP, gross domestic product, right? And GDP measures, I'm just gonna make it in simple terms, how an economy is doing, right? I'm not gonna get too crazy. I don't want to confuse all of you guys, right? So GDP just pretty much measures how an economy is doing, right? Is it expanding, or is that economy contracting, right? GDP helps us identify that. So if we look at these three measures, guys, right, and we're trying to figure out what sentiment is, or what sentiment can be like, we have to figure out how to interpret this. CPI, we're starting to see CPI finally to turn around, right? Which means the prices of goods and services are now getting cheaper. Okay, that's what that means. NFP, unemployment rate, is at all-time lows, right? So we have inflation finally looking to seem like it's, and again, I'm thinking from like a big-time investor, guys, trader's perspective, right? We have to really start to approach this, guys, from a big-time investor trader. CPI measures, change of price in goods, right? That is a bullish, right? Decreasing CPI is a bullish signal. Low unemployment rate is a bullish signal. GDP right now for us, we just came out negative 1 point something percent, right? So out of these three major news releases, which is pretty much what the Fed tries to manage and control to keep us afloat, the only one that right now, guys, is pointing negative is GDP. Right? CPI, positive data. NFP, low unemployment rate, so positive data. GDP, we have seen the economy contract 2 quarters in a row, aka recession. So right now, the only thing that's stopping us from having like a full a home run is that GDP. Now, this is the thing that we also have to keep in mind, though. GDP is also technically a lagging indicator, right? Because GDP is going to be dictated by CPI, by NFP, by retail sales, by PPI, right? Because GDP is just telling us how willing consumers are to actually spend their money. Measures how an economy is. It also is, you know, it pretty much just shows how confident a consumer is when it comes to spending money here. So this is also a lagging indicator. Why? Because this type of release that we just had, CPI decreasing, is positive. Low unemployment rate, good NFP numbers, is positive. So these two releases can dictate this release right here. Because if these two come out positive, then that can influence a lot more spending to occur. And our gross domestic product, a big portion of it is made up of consumer spending. Is this making sense, family? Drop a 3 in the chat, right? Drop a 3 in the chat if this is making sense. Drop a 3 in the chat if this is making sense. Because you got to understand this stuff, guys. You have to understand this stuff. All right? These are like the big 3. There's a bunch more, right? There's a lot of major news releases, but these are the ones that I'm really focusing on right now, because these are the ones that the big traders and investors, guys, are absolutely paying attention to. CPI for inflation, NFP for jobs, unemployment numbers, GDP to see how we're doing as an economy, right? Are we still contracting or are we expanding? Okay. All right, I love the 3s, right? I love the 3s. So all of this, in my opinion, when you couple all this together and couple the fact that GDP is a lagging indicator, we could pretty much make a decision that for right now, we are going to be risk on sentiment. Okay. Again, guys, this is how you pretty much come up with sentiment in the market. You read the data, you figure out how most investors and traders are going to interpret that data, and then you come up with the sentiment overall. So I'm expecting short-term, though, short-term risk sentiment. Short-term risk sentiment, right? So I'm expecting the euro, guys, to continue its dominance, or at least for right now, continue its strength up into this area of structure that we have up here. Right, I'm expecting the euro to make its way all the way up to around the 1.045 at this point. The dollar, I'm expecting the dollar, guys, to continue dropping, probably right down to around the 104, I would say, the 104.5 level. And then from there, I'm just going to reanalyze the market to see what the market ends up doing. AUD/USD. All right, AUD/USD, guys. I would love to see AUD/USD now at this point potentially make its way up here for AUD/USD. All right, 0.715. Right, big shout out to George. What's going on, George? I appreciate you. Let's go. Welcome to the wealthy fam. Let's get it. Make sure to go ahead and send me a message, George, on Instagram, and I can get you added into our private community. I definitely appreciate you for supporting and sponsoring the channel. It means a lot. All right, let's see what else we got here. Started off the week on August 8th. We saw a sell-off. CPI just came out and took all those sellers that were holding 100%, Christian. All right, 100%. That's why last night, guys, when I was talking to you guys, I told y'all that I'm pretty much break even on all of my positions, and I was just going to wait. Right, so I was in a EURUSD sell. I ended up closing one position out, but I was still holding one to see if we were going to continue based off the release. And yeah, that didn't work out, right? So overall, I did get stopped out at break even here on Euro. I also did get stopped out on break even here, also for the for US30 as well. Also got stopped out at break even. I was in a short for that as well. And it is what it is. Right now, it's just about, again, letting the market do what it does and then figuring out what we can come up with moving forward. Right, so in terms of these indices, right, in terms of US30, in terms of NAS and SPX, we'll take a look at all of those. But now at this point, guys, there is a good chance for US30 realistically to possibly reach even higher now, right? Like, I wouldn't be surprised if we do actually start reaching towards that 34,000 range before we continue. Because again, yeah, the data is there, and I appreciate the data. But I still think I still think inflation is still not fully over, or at least, you know, I personally don't think that we have plateaued just yet. We could have. We're seeing signs of it. We have data that we finally are turning around. I could be wrong, you know, and I'll accept the fact that I'm wrong if it happens. But I don't know. I still feel like we still have a lot more downside to go for the economy. I still think inflation is still very much gonna remain higher 8%. Around that 8% level, so we'll see what happens for sure. All right, let's see. Thanks, much love from Melbourne. Now, much love to you, George. I appreciate you. Donnie J with the 10 bones. My guy Donnie J, I appreciate you for the $10, my brother. I appreciate you. It definitely means a lot to me. Thank you so much. And I'm glad that you donated, because that means that you are gaining massive value, and that's pretty much all I'm really after, is just giving you guys massive value, guys. So overall, you know, we do have two major areas of supply here for US30, but at this point I'm expecting more continuations higher. Again, short-term risk on sentiment is definitely what I'm leaning towards. So any type of pullback that we can experience, whenever we do get a pullback, whenever we do get one, I would like to look for continuations now. Okay, I would like to look for continuations. So that's what I'm looking for here, guys, on US30. Again, all these other indices are going to be very similar. S&P 500 now at this point can probably really come up to these highs. You know, we're already smashing the highs here on out of this supply zone right here for S&P. Yeah, I think we can continue. All right, I think we can realistically continue, unless, I mean, yeah, that's my bias. Just looking for more continuations to the upside, guys, overall for these indices. So any pullback that we might see, again, because there is a chance for a quick pullback before we continue. Right, I want to experience more continuations higher now. Okay, I want to see price for S&P 500 make it up to the 4,300 range, and then from there we'll analyze the data. We'll see what type of sentiment the market is experiencing, and then we'll go ahead and make a decision on that for sure. All right, but overall, it still looks really good. Right, it still looks really good, guys. Right, it really does. Now, in terms of the few setups that we spoke about last night, again, guys, I do go live every Tuesday, Wednesday, Thursday right here on YouTube. All right, free session. Obviously, you don't got to pay for nothing. Just show up and learn and get educated. All right, so if you have never been a part of any of my live streams, family, catch me tonight on this channel live again at 10 p.m. Eastern, and we're going to be going over every single thing that the market has been doing. All right, just so that we're all on the same page, and we'll also take a look at how the markets have been reacting and moving so that we're all positioned better, right? But looking at this, guys, we were talking about Euro Pound last night, and I still am looking for this move overall. All right, I would still like to see this market come up to around 0.847, guys, and then I do want to go ahead and go short on Euro Pound. I just like it. It just looks very juicy. It looks very attractive to me, so I like it. You know, I love I don't just like, I like the setup, but I really love the potential risk to reward here. All right, I like the setup, but I love the risk to reward. All right, we're talking about 8 to 1 risk to reward. So very, very good in my opinion. So again, it missed the entry initially by 5 pips. It missed the entry, but I'm still gonna be holding. I'm gonna be holding and see if we can get up there and then go ahead and take that short. 20 pips, Savage with the $3. Let's go, 20 pip. I appreciate the $3, my brother. I appreciate you so much. Thank you for supporting the channel. It definitely means a lot to me. Right, so yeah, guys, so Euro Pound, again, is something we talked about last night. I still like it. I'm still going to be holding overall. But for everything else, we're not going to chase these markets at all. We got the sentiment now, right? Clearly, the market is risk on sentiment off of this release. We can tell by how much momentum the market has been picking up. So we want to stay with that momentum until proven otherwise, okay? Stay with that momentum for now. So any little minor pullback we can experience or we can get can definitely go ahead and trigger more continuations higher, guys, here for Euro USD for sure. All right, let's see. Yep, NAS 100 is going to be very similar to the other actual indices. So we are already at a major level of structure right now, and price could realistically stay in here. But again, I think we could just, again, like I mentioned, right, we could experience some short-term strength overall just because of the release. And that will probably bring us right up into this level up here, 14,000. So that's pretty much an area that I'm going to be very interested in. It's probably going to be right up at this $14,000 range. Right, so if we're able to see NAS make its way up to 14K, then that's really where I would like to go ahead and look for more shorting opportunities from. And very simple, guys. Again, when I highlight these levels of structure, it's not complicated. I just look for areas where the market has clearly reacted in the past, but also, most importantly about that, is I also make sure that that level that also is an area of structure that we want to play off of also has evidence of areas of supply and demand. Right, so we can see that this area right here, guys, is pretty aggressive. You know, we ended up chilling at this level before we seen a massive sell-off that broke structure. You know, so we can say that, you know, that could be an area where there could be a lot of supply waiting to be released. So that's pretty much where we want to take advantage of it. All right, we take advantage of that on a move up there. That would be absolutely lit. All right, let's see. Shout out to that boy Jonathan Rubio. Welcome to the Wealthy Fam, my brother. I appreciate you. You've been rocking with me, bro, for probably 6 years now. You were honestly one of the first people to grab my original course that I created a while ago, like literally years ago. So I definitely appreciate you, my brother. Thank you so much, Jonathan, bro. Make sure to send me a message, bro, and I can get you added into the private Telegram. Right, we got Z with the $10. Let's go to 10 bomb. Definitely appreciate you as well. You've been on my streams every single session, every single stream. You're also part of the circle, the inner circle. So I appreciate you so much for sponsoring the channel. It definitely means a lot to me for sure. Right, but again, overall, guys, as of right now, that release is definitely going to favor indice strength. So any little pushback down can definitely trigger an opportunity to continue to go higher. Okay, so all my indice traders in the chat, which I know a lot of you guys are probably indice traders because this has just been a thing lately. All right, again, it's just my opinion. I could be wrong. But my sentiment off of the data is that this is going to benefit indice strength, and it's going to cause dollar weakness. Indice strength, dollar weakness based off this release. So that's how I would be looking to actually play it. Now, if from a technical perspective that does not occur, like if say we see NAS 100 just start collapsing, then yeah, you know, the data itself is just not as convincing to most traders and investors. But overall, I think that we have a much higher chance of seeing strength, indice strength come in based off the actual release as a whole. All right, let's see. Can you check US 100? I mean, I believe the US 100 is still the NAS 100. I think pretty sure it's the same exact thing. But let's go take a look at it. Right? Yes, I mean, it's gonna be the same exact thing as the NAS 100. Literally same exact thing, just different names. But yeah, similar concept. You know, I would like to see literally this just come up to these levels up here around the 14K level. Right? That's really what I like. The 14K level just looks super juicy to me. Gold. Yeah, let's go take a look at gold again. Again, gold has reacted in a very bullish manner overall, but we are starting to see this thing start to decrease. Right, so when it comes to, again, gold, we have to be very mindful, guys, that gold is a very interesting asset lately that has just been moving very similar to more of a risk off type of play, or a risk on type of environment. But let's take a look at gold and see where we're at here. So over here, guys, looking at gold on the daily time frame, we are at a major area of structure. I'm just gonna highlight it so you guys can really see it. All right, so we're at this major level of structure where clearly the market has acted as a level of support in the past, area of demand in the past. Every time price came down to the 17.99 level, you know, buyers just started buying it up tremendously. We eventually ended up breaking that level, and now we're just pulling back to it. Right now, again, this technically has been acting very risk-on-ish, right, where it pretty much just plays off the dollar strength as a whole. So this is how I'm going to play gold, right? Gold has a chance of pretty much reacting both ways. We can see this thing really start to sell off from these levels and push back lower, which is what we've been experiencing for this entire year, which is gold weakness. This entire year was gold weakness, right? Or since we did come out with some data that could, I don't know, yeah, gold has just been acting very weird, right? But what we can pay attention to now is either we're going to sell off from here, or we see a break above this level, a rebound, and then we can also experience gold to rebound as well, right? Literally the only two plays I'm gonna be looking for here for gold. We could possibly target up to this area of supply, but that's what I'm looking for, right? I need to see something, right? I need to see gold tell me something. Okay, so it's either we're gonna continue this dominance. If we could break above this level right here, 1810, then I like the continuations higher above 1810. But if we actually end up, say, breaking below 1780s, then that could trigger a continuation lower. So I'm on the sidelines for gold, though, personally speaking. I'm just going to be chilling, seeing what the market gives us, and then I'll be able to react once the market gives us a direction. But again, gold is just going to react in a way that it chooses to. You know, it could really react either direction. It could act as a risk-off sentiment type of asset, or it could act like a risk-on type of asset like it has been. So overall, I'm going to be on the silence. I'm going to be chilling. Let's see, my guy Christian with the 9.99. Let's go, let's go. You guys are on fire. You guys are on fire today with the actual super chats. I appreciate y'all. Thank you guys so much for supporting the channel. It pretty much, whenever I get a super chat family or you guys just supporting the channel, it just means a lot to me, because that means that you guys are getting value, right? And that's always been my goal more than anything, is just to be able to provide you guys with massive value. That's it. Right, so the fact that you guys are showing love, that means that I'm doing my job, and I'm excited for that. What's up with PPI tomorrow, right? Yep, that is a good question, right? So with PPI tomorrow is going to be very interesting as well. Again, now for gold, guys, right? Keep in mind with gold, right? Again, remember what I told y'all, right? We can experience a big push up, and we can also experience a big push back down, which is what we're looking at right now for gold. So gold can very easily come into this area of supply where the buyers really started to buy from, where the demand for gold clearly started to pick up. We're on a 15-minute time frame, and down in these levels, guys, yeah, you know, we can see if price can give us another entry to go ahead and really ride this thing higher. Okay, but if price ends up breaking this level with a lot of force, with a lot of momentum, then we're probably going to end up using this exact same level as a reason to go ahead and go short on. All right, because again, remember, the buyers showed their face here, right? The buyers showed their cards here, right? We clearly know that we have a lot of buyers here, which is what caused the price of gold to go higher. Now, the question is that as we start to correct, is there going to be a lot of pending orders or unfilled orders? Hey, where'd gold go? That will probably want to get triggered to continuate the move higher. It's very possible. Okay, so I will start looking for buys around gold, guys, around the 1793 level. If we can go ahead and see the price get down into that 1793, and then we go ahead and go to lower time frame and start really identifying structure on lower time frame, then yeah, we could potentially get us a very, very good trade. So we're gonna keep our eyes on this one right here, guys, for gold. I'm pretty sure if gold is probably dropping, then there's probably a chance that most of these assets are starting to correct too, right? So EURUSD is starting to correct. GBPUSD. Okay. All right, so yeah, we'll see what happens here with gold. All right, we'll see what happens here with gold overall. And yeah, if for whatever reason, all right, just keep your eyes open. If we see price come into this level, right, I'm actually gonna use arrows, right? We come down into here, right? We want to play off of all this structure down here, right, where all the momentum started to pick up before this big old candle whiplash right here and the big shot up, we want to see price come into there. So if we see price come into here, and then we start to see price slowing down, where like it's getting choppy, and then we see again something that shows a sign of strength on the smaller time frame, maybe like finding the actual pattern, the little corrective pattern, waiting for the breakout, the correction, then that can go ahead and trigger an entry to go higher. Okay, and I want to be a little bit more cautious, guys, especially around these levels, because again, the market could do what it wants to do. It could absolutely go ahead and just shift and continue going lower. That's why I'm gonna be a little bit more cautious, a little bit more patient, and actually see if we can get the actual signal to go in. A signal will be price coming into here, right, creating some type of structure to then go ahead and go higher. All right, I mean, let's see right now, right? Gold is literally pushing in this level right now as we speak. Right, so we'll see how gold ends up reacting and ends up playing. Again, I really want to see it inside of this level, inside of this range, and then it's all about reading the price action once we get into this level. Let's actually see what our MACD is looking like. Again, clearly we had a lot of momentum that picked up here, and now we're starting to see this thing turn around. Okay, yeah, so we gotta wait, we gotta be patient here. We gotta be patient. All right, we gotta be patient. But overall, this is really gonna be where I'm looking for buys if I am gonna be looking to buy gold. Right, it's gotta be in this range. It's gotta be in this level. All right, below the 1793 is where I'm gonna be looking for some buys. All right, so as we wait to see how that plays out, let's see what else we got here. PPI, yeah, PPI tomorrow is definitely gonna be something that again is gonna hold some weight. PPI measures pretty much the change in the price of goods from a producer standpoint. So similar concept from CPI. Is just this is going to pretty much show us how expensive it is to actually run business, right? To actually run businesses, right? So look at this. PPI, the producer price index, measures the change in the price of goods sold by manufacturers. It is a leading indicator of consumer price inflation, which accounts for the majority of overall inflation. Okay, so whenever we see PPI increasing, there are good signs that consumer price as CPI will increase following that. All right, as it says, guys, this is a leading indicator for consumer price indexes, right? So let's go ahead and see what PPI is expected. So again, these are from a month-to-month perspective, but core CPI is expected the same, or core PPI means expected to come out the same. Regular PPI is expected to actually decrease. So yeah, if we do continue to see PPI numbers decrease as well, like if we actually come out as predicted tomorrow, then that's definitely going to continue to lead to more of a risk on type environment. Okay, so just be mindful of that, right? Even with PPI, if PPI comes out lower, close to projections, then we could experience some more strength for indices. We can experience dollar weakness. So that's how I'm going to be positioning myself going into tomorrow as well. All right, so let's see what else we got here. Bro, once I saw that liquidity been build up on UJ, I showed that thing so aggressive, 200 pips. Let's go, Eric. Let's go. All right, that's amazing. Shout out to you, man. I love when people catch nice moves. Why is GJ reacting like this? So let's see what GJ is reacting. How is GJ reacting? Okay. All right, GJ literally went down into the area that I wanted. I mean, again, if you guys were on my stream last night, this is pretty much the area, guys, that I wanted to see price go to for GJ and then go ahead and rebound. And, I mean, price literally spiked very, very close to that zone. I think less than 10 pips in that level. I'm very bullish still, GJ. I think that we still have a good chance for this thing to rebound and continue. So I'm going to be patient on this one. But, yeah, you know, GJ literally just missed the order by maybe 5 pips, 5 to 10 pips or so. But I'm still very much bullish this, guys, especially after this type of closure, right? Like, you got to be able to read this type of price action. Right, where's our level of support? Right, our level of structure or support is right here. Right, so the fact that we broke below that level is not the surprising part. Right, we should have expected price to run this level, which is why I was looking for the buy down here. Right, but the fact that we ran that level but closed back above this level of support, see, now that tells us something. Right, that is giving us clues, family. That is giving us insight in terms of the actual strength of GJ. Right, because if we were going to be bearish and if we were going to continue this overall bearish dominance, I don't think we would have closed back above this level of structure after we captured liquidity. So in my opinion, I could be wrong, but in my opinion, there could be a chance for GJ to actually go ahead and rebound and then go ahead and continue, in my opinion, and a move higher. All right, so that's my guess, my opinion here for GJ, just based off what we're seeing, based off of the reaction, the price action that we're seeing price show us after a break of level of structure support. Yeah, I wouldn't be surprised if we actually did start to see, you know, some rebound here for GJ. All right, let's see what else we got here. But yeah, you know, it's literally playing out exactly how we talked about last night. Let's see. You need a trophy. All these gems. I appreciate you, O'Neal. Definitely means a lot for sure. Thank you so much. Abel, you're going to be doing this daily for the opening bell, right? Probably not, being honest with you. Just because normally this is when I trade, right? This is when I lock in. This is when I get in my zone, and then I do what I have to do, right? I get this question a lot. Abel, why do you trade Asian sessions, bro, if you normally trade New York session for yourself? It's because New York sessions are my sessions, right? Like, that's when I'm able to lock in, no distractions, right? Not have to worry about people monitoring me, and that's when I get crazy, right? And I just don't need no distractions for my personal trading, because I actually live off of this, right? I actually live off of trading, right? Like, I live off the money that's in my trading accounts. Obviously, it's not my only streams of incomes, but they are, you know, they're a major aspect of it, and I don't need no distractions. Right, I don't need no distractions, right? I don't need no type of public pressure, no type of peer pressure, because I have hundreds and hundreds of people on my live sessions trading together, and I'm good on that, right? I'm good on that for sure. But I will do my Asian sessions and still give you guys my overall outlooks, my overall setups. It's just the execution. I need my time for me. All right, let's see what else we got here. Yeah, yes, I captured. Nice liquidity capture example, 100%. Right, bro, literally, you talked about this level on GJ. You were looking to buy that thing. I literally had a buy limit. It didn't hit it. Yeah, it literally missed by, like, within 5 pips, like, literally. But it's doing exactly. I mean, if trade would have triggered, you would be up a nice little bag right now, right? Like, look at this thing. This thing came down to here and shot up 70, 80 pips just like that, right? So, yeah, it would have been a very good trade, but it is what it is. Let's see. What time frame do you enter on? That's a great question, right? So, I trade... this is how I do it, guys, how I structure my opportunities from a technical perspective, right? As we watch gold, you know, we're going to keep our eyes on gold. But the weekly, the daily, and the 4-hour time frames, those are my overall bias time frames, right? That's where I try to figure out the overall bias, the overall trend, the overall flow of the market. And then I use the 15-minute, the 5-minute, the 1-minute for entries. All right, so weekly, daily, 4-hour overall bias time frames. 15-minute, 3-minute, 1-minute, 5-minute overall entry time frames, right? That's when I'm actively looking for an entry on the smaller time frames. All right, so let's see. All right, let's go ahead and take a look at NAS, right? Because somebody said NAS 100 for sure. All right, so again, big break, move to the upside. You know, we come back up to a level of structure, right? An area of supply as well. Right, short-term supply, so we could experience a short-term pullback here for the NAS, but I'm expecting strength to continue, in my opinion. Again, everything is based off of my current sentiment of the market. I am risk on. I believe riskier assets like the crypto market, the indices markets, the stock market, I believe all these assets are probably going to increase in value based off the actual data. So, yeah, you know, even if we do experience a short-term pullback here for the NAS, which is very possible, and if it does, I mean, I would love it. Shoot, I would love to be able to get a nice entry position to ride this thing bullish, right? So if we do see a correction, I'm going to be looking to buy it up, okay? I'm going to be looking to buy it up. Now, the question is, Abel, do we have a chance to actually sell this down? Well, if you're experienced, if you are an experienced trader, sure, you can do what you want. Right, because once you start to gain experience, you're also able to learn how to read all of these structure points on the smaller time frame. Right, so maybe something like this, a spike up and then a spike down, can trigger a move lower. Right now, you're probably asking, well, Abel, why the spike up? Right, why won't you just why not just a breakdown to continue? Well, yeah, that's possible. But I'm also looking at this little pattern right here, this little build up, and there could be some liquidity built up outside of this trend line. So, you know, I always like to keep in mind the fact that a lot of people are looking at these patterns and these structure levels, and more times than not, we'll see some type of manipulation before we experience an actual move. But yeah, this is very possible, guys. Like, I'm on the 1-minute time frame here for NAS 100. And yeah, you know, if we see a spike for whatever reason and then they push back below structure, that could be a move lower. Or we just see an overall break of this level, that could potentially trigger a move lower. But again, it just really comes down to your experience level on if you want to try to trade these type of pullbacks. They are very possible, especially after a strong move. It's possible, but it is obviously a little bit riskier, right? Because, I mean, trying to buy or trying to sell after such a strong move like this is very, very risky, right? That's like me trying to catch a falling knife pretty much, right? Me trying to sell this is trying to catch a falling knife, essentially, right? I hope you guys get the actual example, right? But overall, you know, it's just a little bit riskier. It is possible if you're experienced, if you know what you're looking for, definitely do your thing. If you're not experienced, if you're still struggling, then don't even bother. Just wait for where the momentum picked up and then look to re-entry to catch another move higher. Okay? Let's see what else we got here. I'm still bullish on UJ. Do you feel like that spike down UJ was to clear out the order before we go higher? And what do you expect to see next? It's a very good question, right? So again, if you look at UJ, you know, this is pretty much where I was looking to buy from yesterday on yesterday's session, yesterday's stream. As you guys can see by the orders. And again, there is a chance for price to rebound from here, right? Especially because the yen is still extremely, overall, the yen is still extremely, extremely weak. Yeah, we just had some strength come in because of the data, right? But this strength that came in my opinion, is more so just off dollar weakness, not really necessarily do with anything in change of the Japanese yen. And there is a chance for it to go higher. But again, based off the release itself, right? I'm literally just making this decision, guys, based off of what just came out. The fact that we actually came out to 8.5% inflation, that says a lot. And that's why I think that there is a chance for now UJ to actually go ahead and experience some more bearishness to the downside. There is a very big possibility on that, right? Again, I'm thinking just because of the data, right? So now my bias yesterday before the actual data was for us to start flying, right? I wanted us to start going all the way up to the moon. That was pre-data. Post data, after the release, now my bias has shifted to risk on, and now there is a chance for the market to actually do something like this for UJ. Right? You guys see how that works, family? How, again, our biases need to adjust to the overall data of the markets, not necessarily the technicals of the markets. Right, this is how smart monies are trading, right? These are how the smart money is trading, guys, right? We analyze the data, and then we create sentiment off of the data. And then we just align ourselves with that current sentiment that we are experiencing. So, yeah, although there's always a chance, and if price for UJ, guys, does break out higher and it breaks above this 134 level, then, yeah, I'll probably will continue, you know, look for continuations, right? Because then it pretty much completely erased the entire sell-off move. And then, yeah, there's a possibility. But for now, I don't know. I'm just leaning towards more risk on sentiment, so we could potentially see something like this now. Right? I mean, again, it's all about adjusting, guys. The only reason why I ever change my sentiment of a market is because of data, right? I don't change the sentiment of my market because of my emotions, right? Because of how I feel, right? Because of this. Yeah, a lot of these decisions that we make are opinion-based, which technically are feeling-based. But we're using data to make these opinion-based decisions, right? So these are educated decisions. Educated, you know, reasons for why, right? It's that L word, logic. Logical-based decisions is what us as traders need to do and what we need to apply. So we'll see ultimately what happens there. Let's go back and take a look at gold. All right, so gold didn't reach into the area, man. It didn't reach into the area, guys, that I wanted it to. Just yet, at least. But we are starting to see a bullish reaction from it. Right now, what I want to see for gold still, right? I still want to see, this is good news, right? Seeing a reaction like this before our actual kill zone is actually pretty good. Because now what we could experience, guys, is some correction type of structure, right? Where we start doing some type of a pattern. Maybe something like this. Until we get in this zone. That's an ugly looking pattern. Let me redraw this for you guys. You guys deserve better, right? So then we have, again, something like this that can be formed, right? Some type of a corrective pattern showing that momentum is slowing down to the downside. Again, I'm really showing you guys how to read price action. This is nuggets, right? So we're seeing price come back down. We're starting to see a little pullback, but that's fine. We could see this choppiness start to occur. And then the moment we see a nice breakout of the range, that is our trigger to go ahead and continue going higher. Again, we're on a 3-minute, 1-minute time frame, guys, as we analyze this. So this can happen actually quicker than you think. Right, so that's just one thing that I will be looking for. Again, if the market just continues flying, then it is what it is. We missed it, right? We missed it. It is what it is. But this is what I want to see. I want to see this type of choppiness now start to come in and make its way down, and then from there we go ahead and look for a move higher for sure. Right, but overall, I still like to move higher for gold. Let's see. Do you think a possible buy entry area for GBPUSD is around 1.21? Let's see. I mean, yeah. You know, obviously we want to align ourselves with where the momentum really started picking up. We clearly have a lot of demand down here at this level for pound dollar, and we know that because again, like guys, don't overcomplicate things, family. Right? Like, do we have evidence that the demand for the pound increased? Yes, we do. Look at how big this damn candle is. This is a massively big candle. So clearly the demand for the pound has increased at around the $1.20 level. Right? 120, 121, 1.21, 1.20 was a cheap enough price for investors to pile into the pound based off the data that was released. So yeah, hell yeah. We want to see continuations. It's just we have to be patient now and see if the market can get down there. And that's going to be the same thing, guys, for a lot of these plays. Right? Again, the sentiment has shifted. So our biases have to shift. But the way we still want to enter the market does not shift. We still want to enter back near areas of supply and demand. Okay? So that's pretty much how we play that. All right, so let's see. It's good to keep it in consideration. It makes sense why you would shift. Thanks for teaching me something new. I appreciate you, Eric. Thank you for rocking with us, for sure. It's good to keep it in consideration, so just wait and see how we react to demand and supply level. Yeah, it's really going to, again, these supply and demand levels, guys, are probably the most important levels that we're paying attention to. Because now, when price does come back to these areas, we're going to really see if the demand for the euro is as high as we've shown, or if that was literally just a news move and the demand is actually still getting weaker now, right? So how we play off of these areas where we actually seen the momentum pick up is really going to dictate everything moving forward. Okay, let's see. Always great info, bro. I appreciate you, D. Warner. Thank you so much. Man's feeling like a whole ass whale on Wall Street. Oh yeah. Listen, when you understand it, you start to move a little different, right? Like when you understand sentiment and fundamentals, guys, like you start to move a little different. You start to act a little different, right? Because now you're thinking different. Now you're not with the retail community. Excuse me. And that's a good thing, right? The reason why the retail community sucks, and I say that in a nice way, right? But the reason why the retail community, which is all of us, we're technically all retail traders, but the reason why most retail traders are getting destroyed is because they're still only taking advantage of technical analysis. Okay? Do not just take advantage of technicals, guys. You have to implement all the aspects. Okay? If you are not profitable just yet, but yet you feel like you're good at technical analysis, it's because you're still missing fundamental and sentimental analysis into your overall aspect of trading. Do not sleep on this, guys. Okay? Reason why retail traders getting destroyed because they're the only group of traders that don't take into account the data that the market is telling us. Right? Let me say that one more time. The reason, or let me say this one more time. Guys, retail trading community is the only community that tries to trade profitably without taking into account the data, the news, the sentiment behind the news. Yeah, I'm scratching my head right now too. Because it doesn't make sense, guys, right? That's why the retail community has such a bad name, and that's why people are now, quote unquote, are trying to call themselves smart money traders so that they can get away from the stigma that's attached to retail traders. But first of all, let's clear the notion. Just because you trade quote unquote smart money concepts doesn't mean you're trading like the banks. Right? That doesn't mean that at all. You'll never trade like the banks. All right, let's see. Shout out to Cadastro, super supporter in the building. What is going on, Cadastro? I appreciate you. Thank you for rocking with us. It definitely means a lot. Make sure to send me a message on Instagram, and I'll go ahead and get you added into our private community, because the private community is definitely very, very, very popping, Christian. Right? Very. Inner circle is popping for sure, right? So I appreciate you. Shout out to you. Thank you for sponsoring the channel. Right? So like I said, and I'm going to say it 3 more times for the people in the back, for the people in the front, for the people on the side. Retail traders have a bad name and are the laughing stock of this community because they are still only relying on one way of trading. The retail trading community is the only community that does not try to use news. And it blows my mind. It blows my mind. So if you're calling yourself a smart money trader, but you're not even understanding news, cut that out. Cut that out. Right? No, because now you're making yourself look even crazier, especially for people that are actually doing this, right? Like real traders, not guys, I want you to understand. There's a difference between a social media trader and a forex trader. Do not fall for the social media traders' antics, right? Which the social media trader antics are to show profits, show this, bloat that, right? But they never show the downsides, right? They never show their losses, the blown accounts, all that stuff. No, real traders, we don't hide the fact that we blew multiple accounts. I do not hide the fact that I've blown a shit ton of accounts throughout my journey. I don't. There's no point in that. Why? Because I don't care. That was all a part of my process, right? Those blown accounts molded me into the trader that I am today. I don't shy away from losses neither. I don't. If I take a loss that I called out, what's the first thing we're going over when I come back on stream? That loss. Why? Because now we're able to go ahead and continue to grow from that loss, right? So again, family, please, difference between social media traders and forex traders. Do not get caught up in the hype. And do not only rely on technical analysis. I'm just being honest, right? So if your buddy tells you next time, oh yeah, bro, I trade smart money, ask him, oh, where, bro? What was the CPI data came out as? I want you guys, and again, this is not trying to say that one community is better than the other, right? Because I too trade smart money, quote unquote, technical concepts, right? I do understand and I do trade those things. But it blows my mind when people say, oh yeah, I trade smart money, I trade like the banks. Oh, word? How's inflation like? What's the unemployment rate just come out? What does GDP do the past 2 quarters? These are questions that you guys need to ask them. And if they don't have answers for that, just know. Listen to anything they say with a grain of salt. All right, and again, this is not me trying to come for anybody. It's just me being 1,000% honest. Because again, over the past 7.5 years of me trading in this space, I've seen it all. I literally seen it all. Right? I've seen the time where everybody was getting exposed. Like back in 2016, if you guys were not here 2016, 2017, 2018, then you guys missed a period in time. I'll tell you that much. Because 2017, 2018 was the year of exposing. Right? Was the year of demo trading. Right? Was the year of this. Was the year of that. 2019, 2020 was the year of smart money. Right? Where now people started, trading various concepts, and that whole concept of smart money came out, which did change the game for me, but it also created a massive ego in a lot of traders. Right? But we've been through it all. Right? We trust me. I've seen it all, guys. Right? I've seen it all. Right? But yeah, we're not gonna keep going with that. All right. Let's see. Gold is coming back. Let's see. Yeah, gold should come back. Like I said, we should experience, guys. Remember what I said. We should experience some type of choppiness in here, and then wait for that break out of the choppiness. That's what I want to see for gold. So we'll see how that one keeps going. What if you don't have an Instagram? Right? That's a great question, Kendall. So if you don't have an Instagram, and you do have a membership to the actual YouTube subscription to my inner circle, simply send me a message right here. All right, I'll give you my email. Right, you can send a message to at wealthwithabel.com. No, I'm bugging. Right, wealthwithabel@gmail.com. All right, that's what you can do. Let's see what else we got here. Cut that out. You guys love that talk. Let's see. You don't trade like the banks. It be like that. Let's see. Let me catch up now because you guys are going crazy. Good looking. Broadway girls ain't in the building. What's going on, A. Williams? I appreciate you. Just signed up for your boot camp. Oh yeah, boot camp gonna be next level. Agree, the market isn't the same anymore. Fundamentals playing big role, and plus a lot of retail traders communities have an ego. They think, yup, that's true, Eric. And that's the biggest thing, right? I can't stand when traders get ego. Like, I get it. Have confidence in your strategy, your way of looking at it, but the ego is going to eventually destroy you. Let's see. Love you, boss. You are great and fundamental. I appreciate you, Assad. Thank you so much. Facts. I've asked some so-called traders what's going on in the world, and they don't know what's going on here in the U.S. I'm telling you, crazy. All right, that's literally one of the and again, once you really get good at trading, like, you can just tell if somebody's actually good or not. Like, I'm trying to be as humble when I say these things, guys, and I'm saying just because of experience, but I can tell whether somebody's profitable the moment that they start talking about trading. All right, like, literally, and I get it. Don't judge a book by its cover, blah blah blah. No, I'm judging a book by its cover. I'm judging a book not by its cover, by the words that's on the cover, by the speech that's coming from that cover, right? That's what I'm judging it on. Because you can just tell. You can tell who's actually doing it and who's been putting in the work nonstop the moment they open their mouth. Right? Let's see. Nice analysis. First time to watch. Bricks, I appreciate you. Welcome to the family as well. Shout out to you for being our newest subscriber. Definitely means a lot for me. Thank you so much. Let's see. Yo, were you at the FX Summit? I was not at the FX Summit, GD. Right? I was not. But I do know that it was a phenomenal event. Shout out to my brother Roy and his team, right, over there at the Chart Addicts community, the Chart Addicts family, right? They did a phenomenal event. It was absolutely on fire, I heard. But as of right now, I will be at the next one, right? I'm definitely going to be at the next one, actually, right? So FX Summit 2023, y'all will definitely catch me there live in person, and I will be teaching. I will be providing value live in person at the next FX Summit. And I'm excited for that, right? But shout out to that boy Roy, and shout out to the whole Chart Addicts team for throwing that event together. All right, so let's see what else we got here. Inflation rate going crazy, and you telling me your double dragon top pattern isn't supposed to hold? Yo, you guys are hilarious. The double dragon top pattern. Oh, let's see. Bro took off the belt and made some cheeks. Real, yup, it happens. I trade smart money. Ask him what CPI number data came out as. I'm telling you, Eric, try that. And just see how quiet they get. All right. Let's see. About to short Nas has to fill in that gap. I mean, it does. I'm not gonna say it has to. Right. I don't like the word it has to, because price doesn't have to do anything. Right. Just be mindful with that wording. The market doesn't have to do a damn thing. Like, it doesn't have to do anything whatsoever. Right. The market could realistically just continue in this strength that we're seeing. Very possible. Right. So just be very mindful of that. If you are going to say things like has to, again, just be very mindful of that. But if you wanted to trade NAS, remember what I told you guys when I just did my markup on the 1 minute earlier. I said I want to see a breakout of NAS from here, and then a rebound to go ahead and continue back lower. Remember when I said that for NAS? I said I want to see a run of this little pattern, which we're seeing the run right now. Right? So now there is a chance for price to potentially go ahead and rebound. Again, if you're experienced and do your thing, try to catch this retracement if you think it's going to happen. If you're not experienced, family, then don't even bother trying to run this. Don't even bother trying to chase it. But that's for anybody that is looking to do it. That's how I would pretty much trade it. Like, I would literally just be looking how price reacts around these levels that we're at now and see if this holds. If this holds where we're at now, this is probably going to be the best opportunity, guys, for you to try to get involved, right? So just see how it plays out. Again, I'm not personally interested in trying to chase this. The market already gave us a massive move. I don't want to get caught trying to catch a falling knife. It just doesn't make sense to me. But again, if you're experienced, you could do it. You could do it for sure. What does the Inner Circle YouTube subscription contain? All right, so it gives you, for one, it turns your name green in the chat, which is pretty cool. Separates you from the newbies, from the rookies, from the regulars, right? It also gives you access to various gifts, various stickers. It also gives you access, which is probably honestly the most important, most valuable. It just gives you access to our private community, where we actually talk all the time. So I actually have 2 different Telegrams. I have a Telegram channel, and I have a Telegram chat. Telegram channel where I'm the only one communicating. You guys can all join that for free right now. The link has been getting sent out every 15 minutes. A link for that gets dropped in the chat. I'll send it as well. Make sure to be inside of this free Telegram family. But the Inner Circle one is a chat that we're all in, and we're all able to communicate, right? That's how you're able to pretty much just bounce ideas off, back and forth off each other and stuff like that. All right, let's see. Hey, I'm signing up for the Academy now. Not wait for 2020. I hear you, Warren. Right? You definitely been asking for it, man. But I got you. You'll be one of the first guys, right? Because I can't say too much, guys, but just know we're working on a whole bunch in the background, right? Me and my team, we're working on a whole lot. 2023 is going to be absolutely insane. And when we drop what we're actually working on, you guys are going to absolutely love it and go crazy. All right, but yeah, just know, Warren, when we do the beta test of this new platform that we're about to launch in a month or so, I got you. You'll be one of our beta testers for sure. All right, because you've been waiting. Let's see, can the U.S. yields reversing cause the dollar to U-turn? It's very possible, right? If we look at the U.S. yield, the U.S. bonds, government bonds, and look at the yield itself, it's very possible, but the yield curve is still very much inverted, right? The yield curve is very much inverted, which is still showing us signs of recession, right? Recession's looming, right? Because if we look at these yield curves, right, or if we look at these actual government bonds, right now, the 2-year, right, they're offering 3.13% return, right? So if you were to get a 2-year government bond, they will give you a certificate paying you 3.13% return on the maturity date of that actual bond itself. Where we compare that against the 10-year, the 10-year is only offering 2.7%. Now let's really, and this is probably all new information to a lot of you guys. This is also something I'm going to be talking about, guys, heavily on the bootcamp, which is why I'm excited for the bootcamp. Anybody that's going to be a part of the bootcamp is going to be absolutely blown away. We've been getting a lot of traction for the bootcamp over the past 2 weeks, and I'm excited for everybody to be a part of the bootcamp. It's going to be next level for everybody that's a part of it. But again, guys, look at this, right? This is some next level information. Again, once again, whenever you see people talking about the yield curve has inverted, right? All they're meaning when you hear things like this, yield curve inverted, right, which is a sign that the country or the economy is about to go into a recession. Whenever you see the yield curve has inverted, normally what's following that is a recession, right? So keep that in mind. Okay, keep that in mind. But the reason why the yield curve is inverted is because the 10-year treasury or the 10-year bond, right, is giving out a lower payout than the 2-year bond. Right, which means a lot of people are not as confident in the economy, right, to actually go ahead and have their money and hold for 10 years, right? Normally, if you're going to lock up your money for a longer period of time, you're normally going to get paid out higher return than if you were just locking in your money for 2 years, right? If they want you to hold your money for 10 years, they better pay me more, right, than I would be getting if I was locking it up for 2 years, okay? So the fact that the 2-year is paying more than the actual 10-year, that is signs of weakness to continue to come in for the overall markets. Now, because of this actual release that we just seen, though, right, with CPI, there is a chance for the yield curves to actually go ahead and start to decrease as well. Guys, when we're looking at bonds, again, the bond market is similar in a way to the dollar itself, right, to the U.S. dollar. Right? In fact, they're pretty much tied. So this is also considered a risk-off asset. Government bonds are risk-off, right? They're less riskier plays, right? Which we could tell. I mean, look at how bullish we have been, right? Ever since we started getting a lot of chaos, a lot of uncertainty, a lot of doubt, this thing has just been continuing to increase, right? Because people are trying to run towards safe haven type of plays, and these bonds are definitely just that. All right, let's see. Check gold. Let's check gold. Let's check gold. Let's check gold. Where my gold at? Where my gold at? Where my gold at? Where my gold at? All right. So now we are in gold. Here we go. All right, we're in gold now, and now we're starting to see the market react. Okay, we're finally in that level. By the way, right, that area of supply that we really wanted to see. We're finally in that level. Now, there's two ways that you could realistically pay this type of opportunity. You can either take the trade right here, stops below the lows, and then just deal with whatever. Right, this is an opportunity, right? And something like this, taking the trade right off the touch of the supply zone, it's not a bad bet. We're still getting a good risk to reward, right? 2.28 to 1 risk to reward, so that's not a bad idea, right? What I'm still going to be waiting for, again, I'm going to be very, very cautious. I'm going to be lowering the lower time frames, and I want to see what price is doing around here. I mean, this is a good sign right here, right? Look at this. This type of reaction, guys, is pretty lit. All right, we have this trend line right here being created, but this is normally what we like to see for entries, right? Bullish reactions out of this range like this, right? You see this bullish engulfing right here, right? Like that is created a live OB, right? Shout out to that boy Skaggs, right? Skaggs actually taught me something new recently, right? Just playing not just regular order blocks. Like this is technically a live OB, right? So we're still going to probably end up coming back down to this level right here. But yeah, you know, playing off of these order blocks and off of these bullish reactions, guys, in this level is really, really juicy and really attractive, right? So looking for an entry at these zones, again, is not a bad play. Stop loss below the range, target back up to the highs. Hey, it could work. It could work. So yeah, that's pretty much what I would be playing, guys, if anything. Let me actually see. I'm gonna again, I'm not in gold just yet. I'm just gonna continue monitoring it, but I'm gonna see. I'm gonna bring it up right now just in case we got to do a quick jump in. You know what I'm saying? Just in case we got to do a quick little jump in. Because again, I would not be surprised at all, whatsoever. But we gonna be patient. We're gonna be patient. Let's see. Yeah, but this is exactly, guys, how I'll be looking and what I'll be looking for. All right, is being able to play off of things like this is extremely, extremely crucial. And just understanding how to play is very, very crucial for sure. All right, so if we're able, right now we're getting a little bit more structure, right? But if we're able to see a break above this level here, right? This is again a little bit more of a passive entry, but a break above this level right here, where we just created the structure on the 1 minute, can definitely be another entry. 100% it can. Right. So if we're able to see price go ahead and clear 1795, that can be a little bit more of a not as aggressive entry, and it might just give you a lot more confidence as well, right? So a break above 1795 or retest can definitely go ahead and trigger continuation. Again, keep in mind, guys, we are on the 1 minute, right? So the 1 minute could throw a lot of noise, but that's pretty much how I would be approaching for sure this market, right? With gold, just being a little bit more cautious, seeing what the market gives us, yeah, just see what the market does. But overall, I do like where we're at right now, right? I like the area that we're at, so we'll be seeing what the market ends up doing for us. Let's see what else I got. Let's see. Thanks for giving out knowledge on Euro time. So far, I'm just being calm, scooping the market. Not gonna lie, that GJ fire play, but my only concern is the bottom orders that could have mitigated. That's very true for GJ for sure. Let's see. I feel comfortable now with sentimental analysis, but I'm still confused with what the yields do to the dollar index or indices. That's a good question. Just look at it as a safe haven, right? It's gonna pretty much react in similar manners that the dollar itself would react. Right, it's going to react in similar ways that the actual dollar itself is going to react, right, where it acts as a safe haven, risk off type of assets, right? So just, you know, the actual interest rate at things are selling at, or at least the bonds are going for, is just pretty much telling you again, you know, what people are thinking about in terms of the economy as a whole. You know, that's pretty much what it is, right? When interest rates are going up, government bonds are going to go up too, because the demand for bonds are going to increase, which is going to cause the value of these bonds to increase as well, right? As the increase for bonds go higher because of fear, uncertainty, and doubt, that's going to cause the price of these to go up as well, right? But just treat it as a safe haven, right? It's pretty much very similar like safe haven like type currency. Let's see, does the yield data lag like jobs number, or is it a good indicator to pay attention to? It makes sense that big money will flow into 2 years over volatile markets, you know? Yeah, I mean, it makes sense that smart money right now, they'll rather lock their money up for 2 years as opposed to 10 years, right? Because, again, if you really do believe that this is going to be a short-term economic downturn that we're experiencing, you don't want your money locked up for 10 years, right? Because then when the markets rebound, which they will rebound, you're not going to be involved, right? Because your money's locked up. So most traders and investors, the demand for locking their money up for only 2 years is clearly more higher than the demand for locking it up with 10 years, which causes that yield curve inversion, right? But that just shows that, yeah, people think that this recession that we're in is going to be over within the next 2 years. That's what pretty much big money's betting on when they're investing into the 2 year. They're betting that the recession is over within the next 2 years, they're able to make their 3%, coupon on whatever it is that they deposit, and they're able to take out that money once it matures and then go ahead and invest it. Okay. So that's pretty much where we're at with that. Let's go ahead and take a look at Bitcoin, right? You said Bitcoin had a crazy reaction. Let's see. Right, so I mean, again, Bitcoin reacts. Bitcoin literally acts just like the stock market, right? Like if you compare Bitcoin to the indice market, they're pretty much identical, right? Literally reacting in very, very similar manners, like literally, right? So again, Bitcoin, you got to treat it, like a risk-on asset, right? Just like we treat the S&P, the US 30 NAS, we got to treat these cryptocurrencies a similar way as well. All right, let's see. Okay, so rates go up. Dudes is like, I need that. They buy more dollar. 2-year rate goes up because demand went up. Exactly. All right, when everybody is rushing towards a specific asset, right, that's going to cause the demand for it to increase, which is going to cause the price of it to increase. All right, but again, yo guys, like, I hope y'all realize, even like this right here, like talking about the yield, the yield curve inversion or the yield curve rate and things like that. Like this is some next levels. Like this is advanced fundamental analysis right here. Okay, this is advanced. When you start implementing all, I've been giving y'all so much advanced sauce, like it's insane. Like if a lot of these course creators out there knew the type of value that I'm giving y'all on an everyday basis, they would be upset. They'll probably try to cancel me somehow and expose me somehow, right? To get me off of YouTube. Because this is some advanced stuff, advanced techniques, guys, that we talk about on a daily basis. I want you guys to not underestimate the fact that this is some very, very valuable information, right? Talking about yield curve inversions, like no Forex traders is going to talk about that because they don't know it. But I've just been doing so much research about this stuff over the past 2 years. I'm very good at it now, right? So overall, it is what it is. Right, but family, at the end of the day, I appreciate y'all. This is pretty much going to wrap it for me today. I am going to go ahead and enjoy the rest of my day. Just take one quick look at gold. Look at that reaction on gold. Let's get it. Do a thing, gold. Do your thing, gold. Do its thing. Let's get it. That's what we like to see, right? Nice little rebound on gold. Right, so again, if we could break this 1795, guys, I'm expecting more continuations higher for sure. But like I said, just protect me at all costs, family, because like I said, based on the value that I am bringing out, just know a lot of people are not going to like it because I'm gonna be exposing all the stuff that they're charging hundreds of thousands of dollars for, right? But I got y'all, though. I'm going to continue doing what I do. Let's see. Wouldn't believe that sauce like the barbecue plaque. Let's go. Barbecue place. Let's go. That's a fact, bro. You're here for a reason. I appreciate you, Will. Just by you answering the questions, that's already advanced stuff most of these other traders don't even care about. They really don't. And the reason why they don't care is because they don't understand it, Eric. Right? A lot of these traders are cap. A lot of these traders are not what they're being portrayed as, right? So just keep that in mind. Yo, do you swing, scalp, or day trade, or a mix? I do a mixture, right? That's a great question, GD. I really do a mixture, really depending on what the market is giving me at that time, right? Depending on the setup, depending on the time frame I'm looking at, and all that stuff, right? But it is a mixture. Normally, I was a swing trader most of the time, but now I'm doing less swing trading and more day trading, more scalping, more than anything. Let's see. Patrick Kenny used to talk about. Yeah, Patrick is definitely one of the best, right? Patrick, shout out to that boy Patrick. He definitely educated me a lot on fundamental as well, right? But yeah, he's another one that's absolutely next level. How do I join your inner circle? You have to have a membership through YouTube, right? So if you go to my YouTube channel, right next to the subscribe button, there should be a join button. If there isn't a join button, then you're gonna have to go ahead and get off of your mobile device and find a computer and do it on the computer instead. Right, but family, I do appreciate y'all. Gold right now is in profit. I don't know about y'all, but I did end up taking that. Right, I did end up taking that. So right now I am in profit. And we'll see how this one ends up playing out. Again, just so you guys can see. I don't know if you guys can see the actual entry, but I am in profit right now on gold. Right, looking pretty good. Because I did take it. Like I said, I was going to see how the market react, and I jumped in that bad boy, right? So overall, we're in good shape. We're going to see how this one ends up playing out. I know all of you guys that were woke are in this with me. As of right now, we did clear that 1795. We are currently literally up around, we're up around 30 pips or so as of right now. So yeah, we're good. As of right now, guys, since we did end up breaking above the 17.95, I'm actually going to go ahead and roll my stops to break even. Just so I can have a risk-free trade, you know, because again, news did just release literally not that long ago. So you just never know with the markets. But overall, we are in good shape. So I'm just going to roll my stops to break even. And then I'm going to let it ride out. 93. Yep, and so now we're good. All right, now we're risk-free. All right, now we are risk-free. And yeah, now we're doing this thing. All right, so not bad, guys, not bad at all. All right, but other than that, I appreciate y'all. I love you guys. Thank you guys for rocking with me this morning. It was another great release. I hope you guys were able to get some value from this play right here, guys. Just looking at gold and playing the data. Again, the candlestick came out very bullish because of the release. Like I told you guys, more times than not, that move will get corrected, come back into that area of structure. Price did exactly just that. All about finding our area of supply or demand and then wait for the entry. And that's pretty much how we played that. All right, very simple play, guys. I hope you guys caught that. If not, catch the recording. But I appreciate y'all. I love you guys. Thank you guys for rocking with me today. I will be live again tonight during Asian session, guys, 10 p.m. Just pretty much going over exactly what the market has done. So I look forward to seeing you guys all on tonight's session as well. So other than that, I appreciate y'all. I love you guys. Thank you guys for rocking with me. And I will see you guys all later on tonight. Let's get it, fam. Let's get it.